Yo, what's up, guys? The stock market crash is getting worse. Nvidia's down another 7.5%. Constellation Energy's down 6%. Actually, in this video, I want to show you some stocks I just bought today. And look at our portfolio the past month. We're down 9%. That is definitely a crash. We're down $2,000. So that is definitely not good. Literally every stock that we own in our Robinhood portfolio is down on the day. Not just our taxable account. Look at our Roth IRA as well. Actually, we have one stock that's green in no data right here. But one stock I did just buy is another share of Constellation Energy. I think this one will be a huge winner in the long run. And at the very end of the video, I'm actually going to be doing a full deep dive on this stock right here. I'm going to give you my full analysis on them, and we're going to look at their investor presentation, show you the numbers for yourself. Anyway, I just bought a share today, right before the recording, at $236, and well, right now it's $235. So it just has gone lower and lower ever since I bought my share. But I'll show you why I think this one's at a great valuation right now. They're trading at 19 times PE. If I actually click that right here, I'll show you. 19.8 times trailing 12 months PE. The forward PE ratio is a 25, but I think it might be slightly lower than that. I think the analysts are being a little bit too conservative, which is okay for me. Still, a 25 forward PE, that's pretty fair. So let me go ahead and show you also our Mumu portfolio. So this account, kind of in the top right here, is down 1.6% on the day. So every stock that we own in here is down, except for our one REIT, the Real Estate Investment Trust, CubeSmart. But I want to make a disclaimer that I might actually sell a stock in here. If this sell-off gets worse and I start seeing some better valuations, I'm thinking about selling out of Nike. And I and that's because I don't really need a company with a 2% dividend yield right now. Look at this. They have a 2% dividend yield. And here's what I'm really worried about. So every single quarter, if you look right now, the dividend cost 40 cents. So they pay you 40 cents every single quarter now. And let me show you their EPS right here. So this is from, the S&P Global Analyst. Look at the EPS in the next two quarters. It's expected to drop down to 27 cents and then 26 cents the next quarter. So they're going to have a payout ratio for that quarter over 100%. So they literally won't be able to afford the dividend the next two quarters if these analysts are right. So I'm just a little bit concerned about Nike. Plus, if I look at their valuation right now, they're trading at 24 PE. In my opinion, I'd much rather buy this stock right here. As like I said, I don't need a stock with a high dividend yield. I'd rather have one with a lower yield, higher growth, and since they have a low payout ratio, they have so much money to do dividend growth and buybacks and reinvest in the company without having to dilute the shareholder. And look at this one right here. This is a company that's expected to grow. Oh, and they're trading at the same valuation. Look at this. They're trading at 24 times earnings. So the same multiple as Nike. Obviously, they're not Nike. They're not selling a commodity. But look at the free cash flow growth of this company. Obviously, they're a way smaller company. They don't have the brand recognition that Nike has. They don't sell apparel or anything. But I just like looking at the perspective of the valuations. And Nike's trading at 25 PE, and they're expected to go down. So if we actually look at the forward PE on Nike, this is where it kind of gets scary. Look at the forward PE ratio. This is unbelievable. If the analysts are right, they're trading at 38 times forward PE, which is really expensive. I don't love that. And a 38 PE for a stock that I don't see a crazy amount of growth of. Actually, I'll show you this right here. Here's actually the main reason why I've been thinking about Nike. Now, again, I love Nike. Like, I love the brand. Well, look at this net income right here. How are they going to get this to over $2 billion one day? Like, this was the hype right here. 2021, everyone was buying their shoes. I have a whole Nike shoe collection. I believe I have more value in my Nike shoe collection than I have in Nike stock. And I wanted to change that. That's kind of why I bought Nike. I was like, if I own so much of their shoes, I don't buy Nike shoes anymore. I'd rather buy the stock or something. But I'm like, yeah, I'd rather buy the stock. But look at the net income right here. I don't love how just flat it is for so many years. It's since 2021 and 2019. It's just $1 billion a quarter, and it's expected to go down. So I'd much rather switch my strategy up into a higher growth kind of company. Another one that I've been kind of eyeing is Eaton as well. Now, I was going to buy this stock, but I'd rather just own Constellation Energy at this point. And I've actually been thinking about selling Nike to buy Eaton because look at this. They're trading at the same valuation as well. Look at that, 25 forward PE, which I think is pretty fair. You get a 1.5% dividend yield, so they have a lower yield, but look at the net income growth of this company. This is incredible net income growth, a lot more consistent than Nike. They're growing more than Nike, and well, that's kind of why the stock has done so much better than Nike. But they're in the electrical industry. Energy demand is what really moves their stock, and well, if Nvidia falls, that's supposed to be there's less energy demand for their GPUs, which isn't great. And I'll be really quick with this right here. The actual Nvidia earnings were really good. This was before the stock split, so ignore this EPS right here. But look at that. It just hit a record, up 81% year over year. Look at the free cash flow per share. Now, wasn't as good as growth as their EPS, but 45% free cash flow per share growth. Yeah, look at that. 22 billion of net income. That's more net income than Meta made in the most recent quarter. Um, and Meta is such an incredible company too. In my last video, we did an analysis on Meta. And today's sell-off is kind of industry specific. Look at this. It's like Nvidia, Constellation Energy, all the AI names. But if we look at like, well, I guess all the markets kind of falling now, but Apple, Netflix, Salesforce, Walmart, McDonald's, these aren't falling as much. So I think it's really like industry specific sell off here, which is kind of odd. But now I want to show you why I love this company right here, Constellation Energy. And first off, the valuation I think is good, 25 forward PE, 19 times PE trailing 12 months. They just acquired a company and it's supposed to be instantly accretive, $2 per share to EPS. First off, look at this EPS right here. If we zoom out, they used to not be that consistent. They weren't getting the nuclear tax credits, but now they're getting all their tax credits. And look at this net income that they're making. They're making over 800 million of net income every single quarter. So remember that number right there. They're making over 800 million a quarter, and the dividend cost just for one quarter, $100 million. So this is an incredible dividend growth stock, I think. And look at their dividend or their share buybacks. I mean, so they used to buy back a ton of stock. The only reason they haven't bought back any stock in the two most recent quarters is because the stock has done so good. They haven't even been public for 5 years, and they're up 400% plus. Oh yeah, look at their cash right here. They have $3 billion of cash. Since they're not buying back their own stock, they can just stockpile up their cash. So they have $3 billion of cash right now. And look at their total debt. Where it says, yeah, total debt of $7.38 billion. So they have half as much cash as debt. Anyway, they're a very financially stable company. If they're making nearly $1 billion of net income a quarter, and y'all are going to believe this either. This is why I just like doing a deep dive, looking at all their numbers right here. Look at their margins right here. Like their gross margin is up to 24%. That's incredible gross margin growth. The net margin, I mean, is doing fantastic. And here's another thing I like about the Moo app right here. If you want to download it, link in the description, first link there. Look at this right here. These are their key indicators they give us for Constellation Energy. Yeah, look at their gross margin. It's up 95%. Operating margin. It's in the top right here. If you look at the top right, it's like the blue bar. 25% operating margins up. EBITDA margins up. Look at it. It just hit a record EBIT margin. Net margin just hit a record. EBITDA margin. Look at their tax rate. Their tax rate is going down because of all the nuclear tax credits. So hats off to the team at Constellation Energy. This is an incredible utility stock, and I can't wait to show you something. Yeah, look at their return on invested capital, 19%. ROE of 31%. Warren Buffett looks for stocks with over an 8% ROE. This well beats that. So what I'm trying to say is I really like Constellation Energy, and they just bought this company called Calpine, and they are in the geothermal energy industry. And this one industry plant that they own supplies 25% of all of California's clean energy from this one facility, and Constellation Energy now owns that. And let me show you a little bit more research about a geothermal industry. Obviously, I forgot to mention, they're the largest nuclear energy play. They own 50% plus of all the USA nuclear energy reactors. They own 50% plus of them. And they're now, I believe, they are the largest geothermal energy producer as well. And they are the largest I don't know about the world, but definitely in the United States, largest producer of clean energy. So this is kind of my AI bet. They're going to power the future. I think the future is going to be powered on geothermal, hydro, and nuclear. I don't think as solar is great, but I mean, Actually, let me show you my solar position right here. My solar position is getting crushed right now, and I just like being fully transparent. Again, I'm definitely not an expert. This isn't financial advice. I just like showing you what I'm buying. I'm probably biased on Constellation Energy because I own so many shares, so I'm definitely biased. But look at Enphase Energy. You know, this sell-off is hitting every sector right here. The solar industry is not doing so hot right now. I do think there's a little bit of hope for them, but if they can return to this net income growth, because look at this. This is when I originally loved this company. Look at all this net income growth that they're having. They're incredibly profitable, but then look what happened. The net income collapsed, even went negative, but they're starting to see a little bit of a revival. They're holding up their margins, which is a great sign. So Enphase Energy is one to watch. But let me go back to Constellation Energy. Let me show you a few slides from their investor presentation. And if this doesn't impress you, then feel free to hit the dislike button. Let me know in the comments. But make sure to drop a like on the video. Let's go get to the investor presentation. So here's why nuclear energy is so cool, I think. We'll look at a few slides from their investor presentation. I'll show you the Calpine acquisition. That's at least $2 per share through 2029, accretive to EPS, this new acquisition that they did. And also it provides $2 billion in free cash flow before growth. It's important you look at the before growth metric because utilities have to invest so much back into the business. But look at this right here. Here's why nuclear is such a cool industry. They actually have one of the lowest mortality rates, literally the second safest to solar. So wind and hydro and gas are all way more dangerous than nuclear energy, believe it or not. That's what the statistics are saying here. And look at this right here, lowest greenhouse gas emissions. So lower emissions than hydro. So nuclear is the pure play for, green energy. So check this out right here. I'll show you a few more slides here that I think are very important here. I think you'll like this. So look at this right here. Here's CEG versus all their competitors. This is their nuclear generation. As you can see, they're way bigger than all their competitors combined. This is like I was saying, they're the largest pure play for the nuclear energy industry. Sorry here. And look, they're the largest producer of carbon-free generation, bigger than NEE, Duke. They even got Berkshire Hathaway Energy in here. So they are literally the largest producer of carbon-free energy. And look at this. If we look at their acquisitions, so look at this right here. Calpine, commercial and industrial market share is 21%. But look at this right here, 21% market share. If we go back to this Calpine acquisition, look where this puts them now. This is before the acquisition of Calpine. They bought them at a compelling 9 or 8 times 2026 value. They bought it. They diluted the shareholder by 13%. They got a really good deal on it. Look, immediately accretive by 20%. Okay, I think you get the point here, but let me show you what's so incredible. Look at this, Constellation plus Calpine. Look at that. That easily puts them as the largest generation output. So not just largest clean energy producer, but just largest generation output. Look at this right here, leading carbon-free generators, beating Calpine plus Constellation. It's lower than all their competitors. I think that's good. The carbon intensity is lower than NEE. Literally, this is the best energy stock according to all the data here. So I really, really like Constellation Energy and this acquisition that they're doing with Calpine retail electric loads. So actually, let me scroll back up to the top here. They have no coal assets. So look at this, no coal generation or coal liability. So that's the good news here. And look at this right here, operating 13 geothermal plants in California. I've actually been there before and looked at this site. It's very fascinating. They do tours every month that you can, if you want to visit there. But I think they're that way of energy is just so fascinating to me. Yeah, look at this right here, 2024 operating earnings guidance of $8.03 a share. Look at this. Here's their enhanced earnings, stronger than 13-year historical margins. This is real because we actually use Constellation Energy for our natural gas. We have our natural gas built through Constellation Energy, and we've seen that the prices have really gone up, and that really the prices have stayed flat, but the actual commodity of natural gas has gone lower. So they have really high margins right now for just their natural gas industry, I believe. But yeah, anyway, yeah, look at this right here. Their EPS is supposed to CAGR 10% off from 2024. So look at this, by 2024 through 2028 is supposed to CAGR up 10% every single year. So that's very cool, that they're giving us that guidance. Yeah, look at here's the guidance for next year. Probably like $9 of EPS. Remember, the dividend costs like less than $2 a year. So they do buybacks as well. Yeah, look at this authorized share repurchases. Look at this. This is what's so cool. Their available cash is 6 billion. Identified growth. They want to maybe acquire another company. They have another dividend right here, and then they do share purchases. So very cool company, shareholder friendly. They're buying back stock. They're doing M&A that's synergistic, instantly accretive to EPS. That's what's so cool. Companies that can just instantly acquire a company and it's just instantly accretive to EPS. I love that. So anyway, let me know your thoughts on Constellation Energy. If you have any comments for me, I'll respond to all of them. And please drop a like on the video for me. I would greatly appreciate that, seriously. And I hope you have a great rest of your day. I'll see you on the next one. My name is Nathan Robert.